The next one we're moving on to is inheritance tax. So one issue that they caused in the last budget that they have actually noticed and fixed was the agricultural property relief and business property relief, whereby if you own a farm or business shares or business assets, there's a £1 million relief per person. But annoyingly, the legislation didn't allow the unused reliefs to be passed over to spouses. All other reliefs could be passed into spouse on first death, but this one wasn't. Unfortunately, they fixed it. So that's not necessarily an improvement, that's fixing an oversight from last year. In terms of actual threshold, again, a very similar picture to the last slide. The allowances and the rates of relief essentially are being fixed until 2031. So the nil rate band, which is currently 325,000, and that has been at that rate, I think, since about 2009. So by the time we get to 2031, that'll be 22 years it's been set at that rate. And depending what rates you use for inflation over that period, you're probably looking at about, that should be up to about 700,000 there. So big sort of big numbers that haven't moved in line with the times. There's then the residence nil rate band that was brought in probably about 5 years ago maybe, which is an additional up to 175,000 per person. That again is fixed, not increasing, and that allowance will be clawed back if an estate is above a certain value, which I think is about 2 million. Again, that limit's not changed, so the inflationary increase on property prices, asset prices, shares, business, savings, investments, etc., more and more people are obviously going to be pulled into the net. And similarly, agricultural property relief and business property relief were reduced to £1 million in the last budget, and that £1 million limit again is fixed until 2031. So even if you have a business now that's worth £1 million and you think you're okay and you're covered, building 5 years worth of inflation, and that may have increased by 30% just for inflation, and if it's growing as well, it might have increased by another 50, 60. So where you could have no IHT issue at the moment, when you're building some sort of 10, 15, 20 year forecast, your estate could be riddled with a huge inheritance tax liability. Again, what was announced in the last budget and hasn't been removed is any people with defined benefit pensions, which are essentially not final salary schemes, if the value of those pensions hasn't been utilised by the deceased person, that will be falling into inheritance tax from 2027. So again, that's going to be another asset essentially on the list for the inheritance tax charge, which is 40% minimum. The statistics I've put at the bottom was, I think, 4.62% of estates in 2023 paid inheritance tax. But obviously, given the rates have been frozen and assets are increasing every year, and the tax takes increasing, the inheritance tax takes increasing by probably 10 to 12% per annum. Given all these changes that are happening in terms of defined benefit pensions, the reduced rate for APR and BPR, and all the clawbacks staying at a certain thresholds, I dread to think what the percentage will be in sort of 5 or 6 years' time. Okay. There's no way to forecast it, but it's going to be it's going to affect a far larger proportion of society than just, you know what I mean, a very small proportion years gone by. So I suppose that's sort of a reminder to sort of look towards more long-term planning. So it may even be that we've got some clients who are looking towards an exit, and it's very much inheritance tax planning is a job for tomorrow. Given the numbers and the rates and the changes that have been brought in, it's kind of forcing people to think about it sooner, because things can be done the earlier we take effect. And I suppose the other thing to mention is there was a lot of rumours before the budget that there was going to be wider changes to inheritance tax, and they weren't brought in. So the potential is that more inheritance tax measures could be brought in later.
Something to look forward to next year.
Depends which side of the fence you sit on, but yeah.
So I suppose the overarching message on the income tax side is like, look, it is becoming more expensive to employ people, which, although obviously the government have pledged not to increase tax on individuals, the problem is we are going to drive up unemployment.
Yeah,
potentially. So I think the key message on there is you when you're budgeting and forecasting for recruiting, you do need to factor in the full cost of the employment, and I suppose you want to get some certainty on the return on investment. and then obviously from a cost to your business, you know that that's going to go up by the 4.1%. So especially if you're a business that's driven by people, you need to be reflecting some kind of increase in your pricing. Is probably the piece of advice there. It's you need to be increasing your pricing to allow for you to retain and pay the same staff, and then going forward, you need to be slightly more savvy with the recruitment process to make sure you're getting return on investment on the people you're bringing in. Inheritance tax, then, I suppose a key thing is understanding your position, but is there again a high level number where you say, look, if your net worth or your estate is worth X, then it's worth getting some advice?
Yeah, well, I mean, so the sort of best case scenario, ignoring any reliefs for your business, is currently a married couple could have £1 million of assets and, in theory, not pay any inheritance tax on that. It will depend on the amount of gifts you've done and other matters. But if you've got a married couple and you've got assets of £1 million or close, I would definitely be reviewing your inheritance tax position. It may be that there are minimal things to do, but essentially the sooner that you review that position, the better. And I think sometimes people don't maybe realise the amount of assets that they've got until they actually start writing it down and realising actually my home's worth far more and the mortgage is minimal or paid off. And the